This is the IRS Problem Solver Podcast. I'm David J. Griggs, CPA. If you've got tax debt, payroll tax issues, or the IRS is coming after you, you're not alone. Each week I share real strategies to stop collections, protect your business, and take control of your tax problems legally and effectively. So let's dive in. Today we're going to be talking about the very first steps you need to take when the IRS comes knocking. Whether that's a letter in the mail, a levy on your bank account, or a revenue officer showing up at your business, what you do in those first days can make a shocking difference between saving your business or losing it. Step one, the worst thing that you can do is nothing. Most business owners see the certified letters and just freeze. They think, if I wait, maybe it'll go away. But here's the truth. The IRS does not forget. And while you're waiting, they're stacking penalties, adding interest, and preparing for enforcement action. I've had clients call me only after their bank account was levied. And at that point, we can still help, but it's 10 times harder and more expensive than if they had acted right away. So the first step is simple. Just acknowledge the problem. Open the letter. Don't throw it in the drawer. The sooner you deal with it, the more options you might have. Trust me, they don't have to prove that you actually read it or even received it. Even the certified letters, they can get them right back, and that checks the box. So they will continue enforcement collections regardless of if you receive the letter or not. The next step is to get the facts. Too many owners guess at what they owe, and they're usually wrong. The IRS doesn't operate on guesses, they operate on data. And that's why I always start with IRS transcripts. These records tell us everything: how much you owe, what years are the problem, when the IRS's collection clock runs out, because there is a clock. They only have 10 years to collect in most cases, unless there's fraud or something involved. And whether they've already flagged you for enforcement. Think of it this way. If you're in a legal battle, wouldn't you want to see the other side's playbook? And that's what transcripts are. Without them, you're flying blind. With them, you've got a roadmap to start with. So here's something most people don't realize. If you don't present the IRS with a strategy, they'll make one for you. And trust me, their plan is simple. Collect as much as possible, as fast as possible. This might be levies, liens, or even shutting down your operations. But if you get proactive, you can change the conversation. Maybe that means an installment agreement. Maybe it's negotiating penalties down. Maybe it's proven hardship so collections get paused. The right move depends entirely on your transcripts and your financials. My point is this: don't let the IRS set the terms. You set the terms. And that only happens if you take control early. So all of this is exactly why we created the transcript investigation. Before we talk payments, settlements, or negotiations, we pull your IRS data, analyze it line by line, and build a custom resolution plan. It's like having a blueprint before you start construction. When you go in with a strategy, the IRS sees you as serious and informed, and that changes everything. So let's recap here. Don't ignore the IRS. Act immediately. Pull your transcripts. Know the facts before you make the moves. And finally, build your strategy before they build one for you. If you stick to these steps, you can stop the damage, protect your business, and actually take control of the situation. I'm David J. Griggs, CPA, and this has been the IRS Problem Solver. Thanks for listening, and remember, when the IRS comes after you, it's not the end, it's the beginning of your strategy.